Hey guys, welcome back to another exclusive podcast from IronFX. At IronFX, we're dedicated to bringing you the absolute best trading education to help you take your trading to the next level. In today's podcast, we'll be talking about how to trade with the MACD, which is the Moving Average, Convergence and Divergence indicator. So what is the MACD indicator? The Moving Average, Convergence and Divergence indicator is a trend-following momentum indicator that shows the relationship between two moving averages of price. The concept behind the MACD is fairly straightforward. Essentially, it calculates the difference between the currency pair or the financial instrument's 26-day and 12-day exponential moving average, the EMA. In calculating their values, both moving averages using the closing prices of whatever the period is measured. The MACD consists of three lines. The signal line, which acts as a trigger for the buy or the sell decisions. The MACD line, which is also considered the faster line because the lines point or plotted move more than the signal line. The signal line is considered the slower line. And also the zero line. You can examine the momentum strength using the MACD indicator. A stronger trend is determined when the two lines are moving further apart. And on the other hand, a weak trend is determined when the two lines converge toward each other, which is also an indication for a possible reversal. The MACD histogram on the zero line provides a visual representation of the difference between the MACD and its 9-day EMA, not the highs or the lows. The histogram is positive when MACD is above its 9-day EMA and negative when MACD is below its 9-day EMA. The point on the histogram where the momentum is zero is where we said the zero line. If prices change rapidly, the histogram's bars grow longer as the speed of the price movement, its momentum, accelerates and shrinks as price movement decelerates. So how should you use the MACD and the best time frames to apply it to? There are many ways to use the MACD. The primary one is the MACD crossover. A crossover occurs when the signal and the MACD line crosses each other. The MACD generates a bullish signal when it moves above its own 9-day EMA and sends a sell signal or a bearish signal when it moves below its EMA, the 9-day EMA. The MACD indicator can be applied to all time frames. But although it can be applied to all time frames, we all know that with indicators, the signals sent are stronger when it's being applied on a larger time frame. So I would best suggest to keep it on the H4 or the H1 time frame. As we use the MACD indicator, it's wise to consider the pros and the cons of the indicator. While the MACD can be used as a clear trend and momentum indicator that provides clear buy and sell signals with the crossover relatively easy to spot, it is like any oscillator or indicator. The MACD does have drawbacks and risks. One of the most significant risks is that a reversal signal can be a false indicator. So always consider what trend the preceding trend was. The MACD does not function well in a sideways market. If prices generally move to the side, when they stay within a range between the support and the resistance levels, the MACD tends to drift towards the zero line because there's no up or down trend, where the moving average works best. Additionally, the MACD is a lagging indicator because the price is generally above the previous low before the MACD crosses the line from below. This can cause you to enter a long position later than you might have been able to. Moving Average, Convergence and Divergence, the MACD, is one of the most used oscillators because it has been proven to be a relatively reliable method for identifying trend reversals and momentum. There are various strategies for trading MACD, but it's best to find one that works for you and your trading plan. You could always apply the MACD to your charts, test it out in addition to your current trading strategy, and once you gain more understanding and confidence with it, it could become an integral part of your overall trading methodology. Anyway, guys, that's it from me for today's podcast on the MACD indicator and how to use it. Do remember to subscribe to our podcast, as here at IronFX, we're dedicated to bringing you the very best trading education to take your trading to the next level. Till then, stay safe and trade safe.